What if $124 trillion changes hands in the United States over the next 2 decades? Who inherits it? Who gets left out in the cold? And will it make America vastly richer or permanently, fundamentally unequal? We are standing on the edge of the largest generational wealth transfer in human history. Most people imagine inheritance as a simple straight line, like older parents pass away and a check is written down to their younger children. But in reality, wealth does not move through a straight line. It moves through a massive, complex ecosystem because this is not a single event. It is thousands of interconnected transfers happening all at once through real estate, family businesses, stock portfolios, trust, retirement accounts, life insurance policies, land holdings, private investments, and family relationships. At the center of this massive system sits the baby boomer generation. They accumulated wealth during one of the most favorable economic windows in American history. They rode decades of aggressive housing appreciation, experienced unprecedented long-term stock market growth cycles, and built businesses during an era of lower competition and favorable regulations. Now, as this generation ages, every major institution in America is quietly positioning itself around the movement of this capital. According to Cerulli Associates, up to $124 trillion is set to change hands through 2048. So what are those layers in which massive amount of wealth moves? The first flow is the visible layer, which is family wealth. Children inherit homes, 401ks, checking accounts, and personal property. To the public eye, this looks like a simple transfer from one generation to the next, but that is an illusion. The second flow moves relentlessly toward professional intermediaries, state attorneys drafting trust, financial advisors managing inherited portfolios, accountants building complex tax shelters, trust companies administer family assets, banks hold deposits, asset managers oversee investments. A massive portfolio of inherited wealth never reaches the heights untouched. An entire professional ecosystem or an entire professional economy lives and breathes in the space between the deceased owner and the eventual beneficiary. The third flow goes straight to the government. Federal taxes, state taxes, capital gain taxes, property taxes, transfer taxes, recording fees, legal fees, and probate court cost. Every single transfer creates economic friction, generating massive revenue for public institutions. Then comes the fourth flow, the healthcare system. Many Americans falsely assume inheritance happens precisely at the moment of death. In reality, massive fortunes are consumed long before then. Long-term care facilities or assisted living centers, memory care services, nursing homes, and healthcare providers are among the largest indirect participants in this wealth transfer ecosystem. The final 5 years of life often determine exactly how much wealth accumulate survives to reach the heirs. Assets that were supposed to build a family dynasty instead become healthcare revenue. The fifth flow slams into the housing market. Millions of homes will eventually change ownership. Some heirs will move in and occupy inherited properties, but many will sell. Some properties will be converted into rentals, while others will sit vacant for years locked in bitter probate disputes. This means inheritance is not just a family issue. It is a national housing supply issue. Entire regional housing markets will be manipulated by the inheritance decisions of grieving families rather than by home builders or developers. The sixth flow alters the capital market. Many inherited assets are stocks, retirement accounts, mutual funds, exchange-traded funds, and corporate ownership stakes. When an $124 trillion portfolio, again I repeat, $124 trillion portfolio shifts from a retired 75-year-old to a 35-year-old hire, risk preferences completely change. We will see massive seismic shifts in capital allocation across different industries and stock markets as wealth finds younger hands. The seventh flow involves the backbone of the American economy, the family businesses. This is one of the least discussed part of the entire system. America is home to millions of privately owned logistics firms, medical practices, manufacturers, and agricultural operations. Many were built by owners approaching retirement age. The central question isn't who inherits these businesses, but rather, do the heirs even want them? A son might inherit a thriving trucking company, but have absolutely zero interest in logistics. A daughter may inherit a manufacturing business and prefer another career. When heirs refuse or reject ownership, these businesses are sold off, liquidated, or consolidated. This creates opportunities for outside buyers. This triggers the eighth flow, which is private equity. Institutional investors and private equity firms understand these demographic transitions flawlessly. Retiring baby boomers with no family successors are the ultimate acquisition targets. The public is focused on inheritance, but Wall Street is focused on acquisition. They are two sides of the exact same coin, shifting power from local Main Street families directly to institutional portfolios. The ninth flow is wealth concentration. There is a dangerous assumption that wealth transfer automatically levels the playing field or reduces inequality. The reality is much darker and complex. Families with substantial assets pass on substantial assets. Families starting with nothing pass on nothing. This demographic event will simultaneously create new millionaires while locking in existing wealth hierarchies. Two kids born in the same zip code in the exact same year will experience entirely different economic realities based strictly on what they inherit. The 10th flow reshapes the physical map of the America. Wealth isn't distributed evenly across the country. As this capital transfers, massive geographic migration patterns will emerge. Inherited wealth will dictate where people choose to live, work, retire, and invest, draining money from some states and flooding others. The 11th flow shifts political power. Wealth isn't just money. Wealth is influence, campaign contributions, lobbying power, media ownerships, and community leadership will change hands. The question isn't just who gets richer, it's who gains the loudest voice in shaping American policy. The 12th flow fractures family stability. We talk about inheritance as a financial event, but it is deeply social. Stuffed family conflicts, sibling rivalries, disagreements over business succession, and brutal legal battles over trust destroy a shocking amount of wealth. Sometimes money doesn't smooth transfer, it burns to the ground in courtrooms. The 13th flow quietly exits the family tree entirely. Massive fortunes will be routed to philanthropic foundations, university endowments, and non-profit, transferring incredible power to institutions while families receive pennies on the dollar. And then comes the 14th flow, which is pure uncertainty. Most projections assume a stable world, like stable housing markets, stable tax laws, stable life expectancies, but history doesn't work that way. Market crashes, sudden inflation, or healthcare breakthroughs that extend human life by 20 years could alter the final destination of every single dollar. The deepest insight here is this. The largest generational wealth transfer in history is not a story about money moving from old people to young people. It is a story about who ultimately captures the value created over the last half century. Families compete for it. Private equity acquires it. Healthcare systems absorb it. The real question is not where this money starts. The real question is where it ends. In our next video, we will uncover the ripples this largest wealth transfer in history will create across America and its impact on us, the middlemen, the ordinary everyday American, and our children. subscribe and hit the notification so you don't miss on what is important. Please leave your valuable comments and let us know what you think about this. Till then, take care.